All right, welcome back to another episode of Profitless on Purpose, the nonprofit accounting-focused podcast. And from an accountant's perspective, I'm one of your hosts, AJ Wheeler, but not your only host. With us this week is Tammy Hess.
Hello.
And Mark Pallardy.
Hi, everyone.
Great show ahead of us. We got about 3 articles. So Mark has an article about billionaires that can't spend their money fast enough. Here's how. I say that's, I think it's an easier ask than that. I think I can spend their money for them, but we'll find out. We'll dig into that one. And then we got another article on how retail trained donors to give monthly reoccurring gifts. We'll dig into what reoccurring gifts are, maybe some pitfalls to them, what to expect if you're initiating reoccurring gifts or giving every month kind of setups. So we'll talk about it and what the pitfalls are around it. And the last topic or the last article that we have for this week is what every accounting basics that every nonprofit team member should know. So even if you're, administrative or an executive assistant or a program person, we have all the accounting basics you should know when you're working in a nonprofit. And then this week's roundtable discussion is the do's and don'ts of donations. We'll talk about the ins and outs. What are the pitfalls of donations? What to look out for as a donor or as an organization when you're receiving donations. So anyway, get us started this week. Mark, do you have our first article for us?
Hey, thanks, AJ. Yeah. This first article was actually really interesting. One of the more interesting articles I've read in a while. And it's called Billionaires Can't Say They Can't Give Their Money Away Fast Enough. Here's how. And this was written by 2 gentlemen who started the Crisis Charitable Commitment Organization. So as soon as I read that, I thought, well, this is going to come across somewhat biased, but they make some pretty good points regardless of the point of view it's coming from. So their organization is talking about how to get people, how to give, where to give, and how much to give for wealthy individuals. And so basically they're talking about how wealthy donors, and we're talking billionaire donors, often are giving these token donations and looking to appear to be exceptionally generous. So they gave examples of like Jeff Bezos giving $100 million to some fund recently, to Feeding America recently. And everybody touted this as, oh my gosh, Jeff Bezos just gave $100 million. This is so amazing. But at the time, he had a net worth of $148.6 billion. So for somebody making $90,000 a year, that would be like giving a $75 donation. But you don't see all sorts of press media coverage for a $75 donation. So their point is that wealthy individuals, wealthy donors should be held up to a different standard. And because economic inequality exists in all aspects of our society, they include philanthropy in that frame of reference. And so they go through, it's a lengthy article, it's a little meatier, and I encourage you to read it. We add links to the bottom of our podcast on YouTube, so you certainly are welcome to read it through there. But basically, they're trying to get everybody, billionaires, on board with this idea that giving money and paying a fair share of taxes are mutually exclusive. So they bring into account people like Warren Buffett, who has talked about giving away the bulk of his Berkshire Hathaway shares to, organizations. But in the time since he started that, he has earned more in wealth from Berkshire Hathaway. Even though he's given away half of his shares in stock, he's still wealthier than from before he started this initiative and this drive. So they're saying, and Warren Buffett is also one of the ones who famously has held himself out to say wealthy donors should be paying higher taxes. He pays a lower percentage of tax rate than his secretary does. So this happened a few years ago, but yet still in the interceding years, he has continued to pay an exceptionally low amount of taxes. Now, that's how tax law and tax code and tax policy has been written. You can't really blame Warren Buffett for filing his taxes the way the code is written, but this group is advocating not only to have higher taxes on the wealthy, but have them actually commit to donating. And I think the bottom line that they get to at the bottom of the article is that 1 to 5% of their assets per year, depending on level of wealth, should be given away, knowing that they're still making money, knowing that their wealth is often growing faster than the money they're giving away, but having what they basically describe as obscene amounts of money, we're talking the billionaire category, and not giving it away is shameful to them. So I thought this made some really good points. Obviously, it came with a point of view, but it came from a point of view of some wealthy individuals. I know Abigail Disney is a part of their organization, and she's been very outspoken on issues like this. So, I was really kind of energized by reading this article, and I'm curious what you both think of it.
Well, as a fellow billionaire myself, I just want to say that I think the article did make some good points. I'm only kidding. Yeah. But but I think the answer to this, they talked about taxes in there. And I think back to, I had a professor once that was talking about like, here in Oregon, you can opt in for like green energy, and there's no rate difference in that. And often people will do that because it's the right thing to do. But I think the thing that really moves the needle on a lot of this stuff is an incentive to do so. And so what I would say is, I think, they're talking about tax and the donations being separate, but I think if there is a tax incentive or more tax incentive for you to, an offset, right? So say you wanted to drive wealthy individuals to donate more, I think you could do it through tax code. I think you could do it where they would be taxed more money, but then give them more favorable tax rates if they donate more money. And the incentive would be there for them to make those donations, and to, instead of it just being like they talked about a tokenism donation, they would have some work to do ahead of them, I guess, to figure out how to donate the money to alleviate the increase in their tax bill that they're going to have. So I don't know, maybe I'm just looking at it from an accountant's perspective, but I think that that's something maybe that is worth looking into for this advocacy group, that, pushing for a tax offset that would be, essentially tax neutral if they took the initiative to donate more money. I know that, there were some changes to the tax law with the Tax Act that happened, 3-4 years ago, where, a lot of long filers became short filers because of a lot of the caps on this stuff. So I don't know. I think, that's one option. The other option is to incentivize, again, a different type of incentivization of donating money. If you're donating X percentage of your income or wealth, that, somehow that provides a tax break to you. Again, I think it would just be an incentive for people to go out and do this, But again, I think it's hard for the general public to put themselves in the shoes of somebody with like that much wealth. It's just, I think it's very just difficult to even think about that stratosphere of that amount of money, and to try even lawmakers and people that would put in policy to enact that. It's just really hard to wrap your head around that much money. I'd like to try to wrap my head around it, but I don't know.
Yeah, I thought this was interesting. I mean, it really tries to kind of do like a mathematical equation as to what the right calculation would be for significantly wealthy people to be able to donate, or what they should donate. I kind of went at it in a different way. Like what I started thinking about was, what can we do to motivate and tie someone, to a really wealthy person, to an organization or particular causes, and to increase their donations that way, versus kind of like the calculation or for a benefit, whether it be tax reductions or anything like that. Because I think that kind of is like the gift that keeps on giving. One, obviously, if they are connected to a particular cause or organization and they're donating a significant amount of money to that particular cause, that, we talked, previously about influencers, and like what's the celebrity influencers are, or even now like CEOs and wealthy people are becoming the celebrities of the world. If they start donating and stand behind a cause with not just their dollars, but also their voice, that it could encourage other people to do the same, that maybe can't donate in the same amount of way or dollars or percentage or whatever that mathematical calculation is, but they could, see like, oh, I really think, so-and-so's really influential and cool. And so they're donating $1 billion. I don't have $1 billion, but I'll go ahead and donate my $100 and all that stuff. So that's where I think that with any donors, we really think about how do you make that connection to the organization and why and the purpose of their giving, more than just because that they're wealthy that they should give. It's the what's going to really motivate them to give. And I kind of took it a different way in terms of the way I was looking at it, but I thought it was a really interesting article and inspired the thought of, how wealthy people, or how much should they contribute, or what they should contribute towards, and how there can be some benefits of that.
Yeah, I think another interesting piece, and I'm going to be a little contrarian against AJ because of one of the points, and I'm going to speak on behalf of the article, not necessarily personally. But one of the reasons that they kind of specifically mention not just giving more tax breaks to wealthy individuals is that we are a country who's mired in debt. And a large part of that is because there are so many tax breaks on the ultra wealthy who just keep outpacing this. And so when the ultra wealthy turn around and say, I'm going to just donate all this money, then they're effectively saying, well, I get to choose what is worthy. My ideas of what is worth spending money on is more important than the government spending it across a broad range of programs or broad range of social safety net issues. And so if I pay less taxes but donate more, then these organizations get it and they benefit, but yet the government goes more and more in debt every year because they're essentially accumulating debt on the behalf of wealthy individuals who aren't paying their quote unquote fair share of taxes. So that would be why the article or the people in this organization would say, no more tax breaks for these guys. They really need to pay their fair share because they have enough to not only contribute to philanthropy, but to also pay their fair share of taxes and help ensure that society at large, because nobody has enough money to give to all the social safety net and organizations, but yet the government exists to help facilitate that. So just the devil's advocate position. We ready to move on to Article 2?
Yeah.
Tammy, take it away.
So I have one that might be able to give some ideas as to how billionaires can donate, but mine article is from the nonprofit Times titled Retail Trained Donors to Make Monthly Gifts. This article provides an interesting thought on how consumers who have already become accustomed to making monthly payments for services, subscriptions, and even products such as razors may be likely to participate in a subscription giving plan. A recent poll shows that 61% prefer the affordability that donating over a period of time actually gives, and then 47% believes that it makes kind of more of an impact than a one-time gift. Some donors stated that giving regularly made them feel like they were more connected to the organization. And the majority of the donors polled are using electronic payments, such as credit cards or debit cards, even when they're paying for things as well as when they're donating. So this can make it easier to set up a recurring donation. The article also reminds us that communication with donors is really important. 73% of those polled stated that they like attaining information as to how their donations make an impact. And 53% enjoyed having the opportunity to connect with those that are actually impacted by the organization. Some organizations have offered promotional items, such as swag, as part of their recurring gift giving program. Which, was about 43% of the donors said that they appreciated. So in previous podcasts, we've discussed the importance of making the donation process accessible and easy for donors. Is setting up a subscription method of giving something that small organizations could do? And what are some of the challenges that could come about from offering this type of giving?
Well, I think those questions are great questions, actually. I do think it's possible, for smaller organizations to do reoccurring funds like this. But there should be an asterisk against that statement because often nonprofits lag in the technology sector and you need technology to be able to do this. It's going to take a lot of manpower to follow up with every donor you have at the end of every month to write a check. A lot of these reoccurring donations need to happen electronically. And to do so, you need to have a technology stack that allows you not only to receive those funds on a monthly basis, but also to record them in the financial accounting system and to be able to account for the fees and processing fees that go along with those reoccurring donations. So that's probably challenge number one. If you're a small organization, you're listening to this and you want to have reoccurring monthly charges like that. And I think the other part of the article that really like struck, and we'll talk later more about this, but really struck a nerve with me is when you're offering incentives for like memberships or reoccurring. We all know like the public broadcasting, you get a swag bag full of like a coffee mug and a DVD set, and for your $200 donation. What you need to realize from the financial accounting perspective is that you need to include those costs of those items that you're giving away, and that needs to be netted against the donation coming in. So you need to be able to have the financial wherewithal to be able to record those things, and the tracking system. You know, if you have swag like that costs us significant money, now guess what? Now you got inventory that you need to track as well. So there's a lot of complications, you know, accounting and operational wise, that need to be addressed when you're trying to pull off some of this stuff. And I think it's vital that you have the full picture before you just decide that you're going to offer. You know, if you just offer reoccurring donations with no strings attached, then that's a pretty easy technology stack to be able to get. And there's things like Stripe and other fulfillment, agencies. I think even Square has something like it. Anyway, there's very inexpensive technology stacks that you can employ. But if you're a paper and pencil, old school kind of nonprofit, record keeping nonprofit, it can be quite a switch and a culture shock to run these programs. So even the low cost, easy to install kind of solutions that are out there, you know, have somebody look at this, because there's nothing worse than getting 2-3 months down the road and you got a mess of reports and donations coming in that you can't tie back to a specific donor or a specific program. So what do you think, Mark?
Yeah, I think I'll mirror some of what you're saying, AJ. I think this is an interesting article, and I would say when you pick a platform for these kinds of things, usually on a website, you have a donate link and you can have an option to have these recurring payments happen. Try to choose a singular platform, right? So that you're not getting money in from 4 different platforms and you're trying to tie together where your fees are and what the donations are. I mean, I've seen also PayPal be used for this for a number of different organizations. The interesting aspect of this, that kind of reading between the lines, is that this is the wave of the future, right? One of the metrics they talked about in here was that 75% of people who are contributing in this way are either Gen X or millennials, and that only 18% of baby boomers contribute in this way. So as we move forward in time, this is going to become more and more common. And obviously, as technology just keeps improving and increasing in different organizations, we're going to see more of this. And frankly, I think it's a great idea, because if you are a nonprofit, going out there, the amount of time, energy, effort that you have to spend to get a new donor in the door, or even on doing yearly asks and all this sort of stuff, is a lot of work and a lot of time, energy, and coin, frankly, to get that money in the door. And sometimes if you have somebody on a sustaining membership of some sort, then they're even willing at the year end, when you're doing your other campaign, to give extra, because they're used to seeing that $15 come out of their account every month. So that's already spoken for. But at the end of the year, they might be more generous and give you some more. So I really love this concept, and, you know, stay tuned, because I think it's just going to get more and more that organizations get savvy to this and bring it into play.
And I also like to add, I think that it's a good way to increase the opportunities for donors, because sometimes, you know, a donor might say, well, I can't contribute $150. That's not really in my budget. I can't do it. It seems like a lot of money for me. And so they'll opt to not donate at all, because they don't want to just donate something small. So they just kind of walk away from that opportunity. But it's kind of easier for folks to say, I can give $10 a month, or I can give $15 a month. I may not even notice that if it's automatically taken out of my bank account or put on my credit card or debit card, that it seems a little bit more manageable. And at the end of the year, they end up giving, you know, closer to that larger amount for them, but it's an easier chunks that they can, you know, really be able to afford and to think about. And then to your point, Mark, that, you know, at the end of the year, they can say, oh, you know, that was pretty good. I'm connected to this organization. I got a bonus or something. I have a little extra funds. I'm going to go ahead and give a little bit more at the end of the year, but it gives them more opportunity to donate and to be a participant of that organization. So it is a good, you know, I like the idea. I think that AJ is on point though. And when trying to do this, to ensure that you have all the technology in place and the recording processes for obviously the accounting treatment, but then also to ensure that, that you have the kind of the security, the IT security systems in place, because you don't want to get into a situation where you're tapping into credit cards or debit cards and there's, a breach of security. So something to think about. So AJ, you have our last article?
I do. So this one is for all the accounting geeks out there. It's from the Nonprofit Hub, and it's called, the title of it is The Accounting Basics Every Nonprofit Team Member Should Know. And so the article starts off, I think, with something that we often hear from our side as accountants, that I signed up to further a cause, not to be an accountant. And that's with an exclamation point. But the article goes on to make the point that the accounting information, it really needs to be some portion of the accounting information and the accounting records needs to either be accounted for by programmatic people and executives in the organization, or needs to be interpreted by those same people to be able to understand where their program is at. So they kind of go through some bullet points here. We'll go through them, and then I'll let you guys kind of weigh in on if you think they missed any or we got any juicy ones to talk about. So the accounting basic number one is what sets us apart financially. So they need to allow what they're talking about here is they essentially they had a board member they had a board report that said they were looking at a budget and that they were going to actually have positive cash flow that year, or essentially make a profit. And one of the other board members kind of, said, is that legal? Can we make a profit? And I think it's very, that sounds like a funny question to us accountants, but I think it's a real thing. When you think about a nonprofit, they think that they're not allowed to have a profit, but the actual fact is like, you should be striving to have extra money left over. If you're just scraping by with enough money to be able to cover your expenses, what happens when you get cost reimbursement? We've talked about before on the podcast where you need funding, you need cash flow to be able to stretch and pay for things that you are later going to get reimbursed from, because often reimbursement grants are the way of the future, and people want you to spend money and then they give you that money back. So so also tax exempt, meaning you don't pay sales or property tax with a nonprofit, is one thing that sticks out under this heading. But be aware, and we'll talk about this later, there are instances where nonprofits do have to pay taxes if they enter into certain activities. So number two, the basic number two, know your statements. So I think it's good for everybody to have in the organization to be able to read like well, I'll use basic terms here, a balance sheet and profit and loss, a statement of activity, and a statement of financial position if we're being fancy about it. But essentially a balance sheet and an income statement, you should be able to read those things. And especially if you're a program leader or director and you're running a program, you should be getting on a regular basis some kind of profit and loss that's showing your budget to actuals on your program, because you want to be able to spend up against your budget. So understanding that is really, really vital. And I think one of the things they mentioned in here is reviewing a check register with an executive to make sure that there aren't expenses that are going out that shouldn't be, is, somebody, writing themselves checks or something. So reviewing that monthly bank statement is ultra important for an executive member of the nonprofit to be able to go over. And if you don't have that, maybe a board member bringing in. Number three is building budgets upon budgets. So we call it BOB, budgets on budgets. But we've talked about this on the podcast before. We, in fact, did a whole series on budgets and went really deep on this. And one thing we noted was budgets often build on sub-budgets and sub-budgets of sub-budgets. So making sure that you have everything budgeted and accounted for is vital. So, and that when we have a whole series on that, I recommend you go back and look at that. But they mention many of the same things for events, programs, properties and locations, campaigns, executive committee or executive branch of the organization budget. So operating budget and then an overall budget. So, and then the fourth, they have accounting basics, know the big picture of your organizational finances. Again, you need to be able to share this at a very high level. If you're in the development department, of how fiscally sound you are. If you're doing grants, you need to report on how fiscally sound the organization is, and you should be able to articulate that even if you're not an accounting professional. So being able to understand that, and they give some tips. And then the last one they give, and I'll let Tammy and Mark jump in here after I'm done, but understanding your part, and I think this is really important. It's not something that I thought about, but understanding where you fall into that financial picture. Are you a money maker, a money spender? How can you help the organization, and where you land essentially in those financial reports that you're looking at and trying to understand. And so I'd like to get Tammy and Mark's input on this. Did they miss anything, or are they being overly simplistic, or maybe they're expecting too much from everybody at the organization?
Yeah, I'll jump in here. I'm going to take a little bit of a contrary view, surprise, surprise, to this article, because it made me laugh as I was reading it, because here is somebody who is laying out how you should essentially be a good accountant for a nonprofit. But as AJ pointed out as an aside, they don't use the nonprofit accounting terms, right? They do not use the statement of financial position or the statement of activities. And the question that happened in the beginning, well, what we have net income, are we allowed to have a net profit? Well, if they were actually using financial terms and accounting for nonprofits, they would know it's, net assets in surplus, or whatever term you use necessarily. So some of these questions go away when you're training your board and you're actually using financials that are built for a nonprofit. I mean, I think there are some good tips here, and there are some good things to keep in mind. And this author, to give her the benefit of the doubt, was probably writing this in order to appeal to a more mass audience who understands balance sheet and income statement or profit and loss. But still, at least make a mention that it's called this and that this is really what you're looking at. Because if somebody just read this article and then looked at a proper nonprofit financial set of statements, they would say, well, what the heck is this? Where's my profit and loss? Where's my balance sheet, right? So anyway, I'll leave it there.
I'm glad you brought that up, because that is one of my biggest pet peeves when I'm dealing with people who are talking about financial statements for a nonprofit. But typically I do give them a little bit of room, because most people don't know the technical words or terms for those types of things. But yes, I saw that too, Mark, and I was like, oh, that's annoying. But what I think what this article is saying, though, is numbers are important, which, I love. I think numbers are fun. So I do think that in a way, everyone in an organization, or even like a donor of an organization, should understand these concepts, because you'll never know, like when you're out and about and you're talking about a particular charity or organization that you're really passionate about, that it's an opportunity to increase the other, another donor, to get another donor onto the platform. So, and typically a donor will ask, obviously we've know that they'll ask about the mission, and we'll ask about, some stories or some information of what the organization is doing. But what we've talked about in previous podcasts are people are asking some of those number type of questions, because they're, people are becoming a little bit more data driven. So understanding that and having that kind of in your back pocket, or at least be able to talk about it at a high level, is really important. And so that you don't have to say to that person that you're having a casual conversation with about an organization, and you're, kind of talking about maybe that, they want to donate it to, that you aren't going, well, let me get back to you and with all that information. If you have that knowledge, you can have it in the natural conversation. And who knows, when that person goes home after having a cup of coffee with you, that they're going to log on and donate, or set up a recurring donation type of system. So you never know what could happen with those. But if you have the information and you're ready to speak to that, it's really powerful, I think.
Couldn't agree more, Tammy. And I would say, like what the article really brought home to me is, the financial data, regardless of where you're at in a nonprofit, I think the financial data and the backup to all that stuff, and having at least a cursory or 30,000 foot view of all that information, is another tool in your tool belt. If you're a program person that's writing grants, you have a good idea of what the organization is doing currently. If you're like an executive director or a fundraising professional, being able to provide information of how your admin and overhead is funded, if it's fully funded by all your grants or something, again, you can then make the pitch that all 100% of your donations go toward a project because our admin's already funded. So I think, again, it's just another tool in your tool belt, and being able to, present this information to somebody and understanding, maybe if you use balance sheet and profit and loss or net income or whatever, or fully funded, that may not matter to a donor, and I think, understand. I think the concept and the presentation of your knowledge of it is much more beneficial. We often get, caught up as accountants in the correct titles of things. But I think, it's good. It's good to understand this stuff. And like I said, it's another tool for your tool belt. So
I am going to add to that. You need to know your audience, because if your audience is a person who is a very experienced person in the nonprofit world and knows those terms, and then all of a sudden you're throwing out, calling it P&L or profit and loss statement or whatever, they might go, wait a minute, you're an executive of this, nonprofit organization, and you don't know the proper term. So you do need to be careful about knowing your audience, because it could be a pet peeve of other people as well, not just Mark's and mine. But it's something to think about as you have that information. And I also wanted to add, if you don't have that information, it is better to say, let me get back to you with that, so you have the right data that you're providing, because there's nothing worse than saying, not knowing, and then saying, oh yeah, I think our donations are upward of $2 million. And then you later realize, oh no, it's actually $2,000. And we get all of our money from funds from the government and stuff. So you need to make sure that you do know what you're speaking about before you actually start sharing that information, or say simply, I'm not sure, but let me get back to you. Or if you have a nice range that you can kind of give, that you're giving that as well. So just think about that as you kind of are talking and having these conversations.
And I think for all the non-accountants out there, if you're listening to this and feel overwhelmed, this is just like anything. The more you do it and the more you train it, it's just like running, right? You're not going to run a 100-mile race tomorrow, but if you train for it, you could at some point, I guess. But I think, understanding these and going through the process of reading a financial statement and understanding what's going on, the more you do it, the more comfortable you are with it. So just think about that as an extra tool in your tool belt. And talking about more tools in our tool belt, we have a great roundtable discussion this week. Mark, do you have our topic for the week?
I do. I teased it last week, and I know everybody listening to the pod has just been waiting. They probably set their alarms for when we drop this, because today's topic, donation do's and don'ts, right? We've got donations. We're going to look at this from a couple different angles. What the do's and don'ts are from an organization's perspective. And also, because we know a lot of you might not actually be working in nonprofits, but you might just be interested in nonprofits in general or in donating to nonprofits. So we're going to talk about some do's and don'ts from a donor's perspective as well. So I'll kick us off. And one of the first do's that I think is really important is learn the rules for accepting donations. So is there anything of value being exchanged? I think a good one that I think of is, let's say you're having a fundraiser and you charge $100 a plate. We have to figure out what the actual cost of the meal is if somebody's coming in. And if that meal is valued at $25, really, you can only write off $75 of that ticket, because they're getting value in exchange. And if you ever read one of your 501c3 letters, it will either say nothing of value was exchanged for these goods, no value of goods and services were exchanged for this donation, or they may make mention of what the value is of what was exchanged. So as an organization, you need to be very cognizant of that. And if people are giving you money and getting something in return, you need to make clear with them what their actual donation is going to be. Tammy, what you got for us?
Kind of in line with that, be aware of the local, state, and federal regulations regarding donations in your area, because some of those could change depending on what you're looking at. So just understanding that. And to add to your point, Mark, I think I love it when whether it's a raffle situation or buying something or attending an event, I love it when the nonprofit gives me the statement saying, here's your contribution, here's the cost or the non-taxable benefit. So your net contribution is this amount. And so it makes it so much easier for the donor to have. So if you do something like that, where you are providing a service or a kind of a gift or something in return for a donation, if you could give that information to your donors, it does make their lives a lot easier, and it really helps kind of clarify those questions. Another one would be accepting kind donations where appropriate. Really think about what you can do when you're trying to do donations. It's not all about money. It can be a service that's given, product that's given that you can then raffle off later, or it could also be, time and or rent forgiveness and all those types of things. So there's a lot of in-kind donations that are available, and to really think about that as you're going through that process. For a don't, I would say don't be afraid to turn down donations that may have some strings attached. Look at them, understand what the strings are. Don't just blindly accept it and then realize that you're supposed to do a certain, whether it be reporting back or whether it's only used for a particular reason or purpose. But, take them and look at them and understand them. But always, you may want to accept them if they do help the organization. What about you, AJ?
Actually, the talking about rejecting donations, I used to have a audit client that way back in like the 80s, they accepted like a $500 donation that was meant for an endowment. And so they had to actually carry along this poor $500 endowment for, 30 plus years. So, if somebody would have had the wherewithal when they got that donation to say no, they wouldn't have had this extra line item and 2 extra pages of footnotes on their financial statements for this $500 endowment. So, and probably extra fees that they paid, in the audit process. So just be aware of that stuff. I think in line with that is making sure your donations or any of your programs are in line with your mission or your nonprofit purpose. So I'll give an example of this. If you are like a nonprofit that deals like, say you're I always use this example, but I'm going to use it again. Say you're a mental health organization that rehabilitate or, has like addiction classes or helping people through mental crisis. And to generate extra revenue, you have a coffee stand in the front of your organization. That is totally unrelated to your exempt purpose. So what they're not realizing is that if that coffee stand is selling coffee to the general public and to your members, then that's creating business income that you have to report as UBIT or unrelated business income on your 990 report. Now, if it's related to your exempt purpose, so say that same coffee stand was staffed with people in recovery and it was a way for them to get job training, then that is part of your exempt purpose. So really, the devil's in the details on these things. So really make sure that any kind of program you have is related to your exempt purpose. And if you want to do something that's outside the realm of that, try to think about a way that it could be related to your exempt purpose. And I think that coffee stand example is a great example where on one hand, if it was just staffed by, teenage kids from the high school and you're paying them money and they're selling coffee, that's unrelated business income. It's in no way related to your purpose. But if it's somebody that's in recovery that's learning job skills through being a barista at your coffee stand, it is related. So look at that. And I think, the don't side would be the other side of that is don't be unaware of this kind of thing where you think you're going to have a coffee stand, make a bunch of money, and you don't have to pay taxes on it. There's UBIT laws. So understand those unrelated business income tax items that are out there and please consult with your tax professional or your CPA or your, well-versed accountant that in your nonprofit to make sure that you have those. Mark, what's our next one here?
Actually, AJ, before we jump on to the next one, I'm going to actually give a personal anecdote because I serve on the board of an organization, and we just had this issue come up this past week where a very large sports venue in the Portland metro area offered to our organization to come and run some booths for food venues at specific game nights, right? So for sports events and venues. And they were going to give us X amount of dollars in order to do this. And we had to have the conversation as a board, is this in line with our mission, vision, values? Is this actually helping and creating a program that is going to directly impact the mission of the organization? Or is this just a fundraising stream that is completely unrelated? And we had an attorney on the board and we had this entire discussion of UBIT. So the rules behind UBIT are also a little bit squirrely, right? You just cannot have substantial income coming from UBIT, or you could risk losing your 501c3. Of course, the IRS doesn't list what substantial is, but many often say it's more than 50%. But if you're being offered something, like you may never have gone into your nonprofit world thinking, well, I'll never have unrelated income. It's always coming from these streams, but something may be offered to you and you have to stop and think when it comes to donations, does this fit with what we're doing? And is it related to my mission? Because otherwise let's say you are a very small organization, but you take on this kind of thing and this revenue becomes more than 50% of your revenue, you're in danger of losing your 501c3. So just wanted to kind of back up what AJ was saying there. I think another do that I would mention here is do get creative when it comes to fundraising and bringing in money. So, there are mental, not tricks, but mental ways of convincing donors to give more money. Matching programs are a great one. Sustainable giving, which we talked about earlier, is in the last article, is a great way. So think about different ways and streams of getting income in the door from your individual donors, and game the system a little bit, right? This is all people giving their money willingly, but if they're more comfortable giving it on a monthly basis, or if they're more likely to give more because they know somebody is matching that funds, don't make up the match, find somebody who's going to actually match, right? But create a system where you're incentivizing people to give more. Get creative. Tammy, what do you think?
That was a good suggestion, Mark. I do like the get creative part. It should be a good tagline. From the donor side, I kind of want to shift gears a little bit to think about, what should they do when they're donating? And one of them could be like really check their websites, check, the Charity Navigator, look at the IRS database to make sure that you're donating to a valid, exempt organization. Really do your research, learning about the organization and if that's one that you want to support or not. And then from the other part to that and doing your research, what hopefully will help you is not to get scammed by, kind of some of the things that are out there that say that they are a charitable organization or, saying that it could be a nonprofit or tax deductible type of giving. And it turns out that they're not. So just be careful when you're looking at that and choosing where to put your funds and or time to, that it's really what you think you're giving to. What about you, AJ?
Yeah, actually, I want to back up what you were just saying about the unscrupulous kind of non-profits in quotes here. There's often, scamsters will try to separate people and their money often. And often what they do is the unsolicited calls with names of organizations that are very like, I don't know if anybody remembers like Seinfeld, the Human Fund or Friends of the Children, or, like any of these things that are very like kind of overarching and very simplistic, or they sound very much like a reputable nonprofit. To be very, and that I think that goes with what Tammy was saying, really do your research on who you're giving your money to, and don't just answer a unsolicited phone call. Oh my gosh, of course I want to help the kids, but you don't realize you're actually giving it to like a call center person, and maybe, 50 cents of your dollar or 25 cents of your dollar is actually going to a nonprofit, or if they're just straight up scamming you. So it happens, not just with, the IRS or the Prince of Nigeria or anything. It also happens with, nonprofits. So just be wary of it. But I think the big one for donors is when you do finally find an organization that you want to donate to, make sure you get a receipt. You need to be able to have a receipt to be able to take these off. It's just like any other expense in a business or something. You have to have documentation that you actually presented the money, and it is a recognized charity to be able to take that charitable donation if you're eligible for it on your taxes. But also too, so you know how much you gave, and you can tally the receipts essentially and understand that and be able to provide that. And so any nonprofit worth their salt should be giving you some kind of donor notification or thank you card or a receipt. So, and this is a shout out, this is a plea with all the nonprofits. Please recognize your donors, don't not recognize your donors, like please, even if it's $5, that person that's giving money that, we may roll our eyes at $5, but that may be all they're able to give, they're in a minimum wage situation. And then like the earlier last podcast we talked about as a percentage of donations, that $5 may be a high percentage of that person's wage. So, no donation is too small or too big to accept and get recognition from. So, and then also too, from a donor side, don't go, we've talked about this before, but don't think everything is tax deductible. If you show up to like a dinner party or one of those, $200 a plate, like Mark said, organizations, you need to realize that like not everything you're spending is going to be tax deductible or actually part of that donation. Be aware that, when you get that mug from the public broadcasting company, that there's a cost associated with that. You just happen to pay $200 for it. So be aware of that stuff. And again, in your receipt, make sure that stuff is itemized. And if not, go back to the organization and ask for it, and make sure that you get confirmation that you didn't get anything of reciprocal value. So Mark, you got our next one, or want to wrap it up for it?
I think we're good to wrap it up. I think one thing though that I do want to mention, which I've seen from a number of clients over the years, is just be wary of organizations like GoFundMe or other places on the web where you're being asked to give money because somebody needs medical help or other needs. Sure, it's great to give money to people in need, and we're not discouraging that, but that's not a charity. You can't write that off. I have seen a number of people try to write those GoFundMe donations off on their tax returns. Well, it's not coming with a receipt, a thank you from GoFundMe. GoFundMe is not a 501c3. And it's unlikely that whoever you're funding is a 501c3. Yes, the nonprofits can use GoFundMe as a platform, but if they do that, then you will be getting a letter from that, and they will state specifically that they are a 501c3. But if you're just giving to Johnny down the street who got into a car accident, great. But give without the expectation that you're going to have a charitable deduction on the other side of that.
Yeah. And if you're unsure, it's always good to ask. So you can ask that question to say, hey, I gave you, $100 this last month. Is that, are you a registered, 503c? And we can have that conversation. So you can still choose to give, which is great to Mark's point, but then you can also just follow up to make sure before you deduct it on your taxes that you have a good understanding as to what it is, and then that you obtain the receipt. So on that, thank you for joining us for another episode of Profitless on Purpose, the nonprofit focused accounting podcast. Please hit the like and subscribe buttons if you're watching this on YouTube, or rate us on your favorite podcast app. Check us out on Twitter at ProfitlessPod, and we would love to hear your feedback, get any suggestions for future podcasts, as well as to maybe get some ideas on the next do's and don'ts. Thank you very much, and hope you have a good day.
Thanks, everybody.
Bye.